Inflation easing slightly in March, so investors liking that. Still remaining high, though, which likely means the Federal Reserve could raise the interest rate again. I think investors, because it's up right now, hoping that doesn't happen. But what a roller coaster. And while inflation is cooling slightly, it is still hitting many where it hurts the most, our wallets.
Yeah, we're taking an in-depth look now at this issue with the help of a local financial professional, Brian Levy from BML Wealth Management. Brian, thank you so much for being with us. It's confusing, very confusing, all the news that's coming out. Yeah, what do these numbers tell us about the current state of inflation and how it's impacting the average person here in Los Angeles and across the country?
Yeah, I mean, like you mentioned, the prices increased 5%, which was from March of this year back to March of last year. So it is lower than expected. So the markets liked it a little bit today. But like you said, it still is up 5% and people are feeling it. Remember, the more people are on paycheck to paycheck. Most people went through their savings during COVID back in 2020, 2021, and more people have money on credit cards. And right now, as rates are continuing to go up, like you said, the Fed has been increasing rates each meeting, and they're meeting in May again. What's happening is people's interest rates are higher. They're having to pay more on the credit cards. And when people's retirement accounts are down in Los Angeles and California, around the country, and prices are higher, that's kind of a bad recipe.
Well, it's daunting, really. I mean, you sit here and look at the numbers, and I think a lot of us go, am I ever going to be able to retire? Am I ever going to be able to save money? 5%, as you said, for people living paycheck to paycheck is a very significant amount of money. What can people do to potentially get their budgets maybe back on track? I mean, it's easy to say, like, I'll skip this or I'll skip that, but a lot of people, these are real goods. I mean, these are grocery store prices, energy. So what can we do?
Yeah, it's day-to-day stuff. So, at the end of the day, we kind of use the analogy, keep your powder dry. It's an analogy used to say, stack up as much cash as you can, cut spending where you can. And that's hard. It's never easy to cut spending, but you have to take a look at your credit card bills and really find out, are you still using those subscriptions, or can you tighten the belt a little bit? Because I think it's going to get worse before it gets better. Also, a lot of our clients, as a retirement planner, we look at, it used to be you get penalized to be a saver. Now you can go to the bank and there's money market accounts online on FDIC insured banks that are paying 4+%. So you want to look at wherever your cash is, don't have it sitting there earning less than 1%, because a lot of banks right now are paying over 4%. You can go out and get treasury bills and things like that. So be smart about where your money is. And also, if you are having a tough time with your credit cards and things like that, don't be afraid to negotiate, or at least ask for waiving your late credit card bill, or waive the late fee. Those types of things, I know they're small, but they're going to make a bigger difference over time.
I think people don't know they can do that either, negotiate. I did not know that, and I did it, and it works.
You absolutely can. They always say, oh, we'll only do it this one time for you, but you can definitely, all you can do is ask. You can't hurt to ask.
And, if people take the advice and stop spending, that leads to recession fears as well. So maybe we'll have you back to talk about that another day. Brian, thank you so much for being here. Appreciate your time.
Absolutely.